Is expected to sign off on the Cash for Clunkers bill, which offers consumers vouchers to buy new fuel-efficient vehicles. Auto retailer Carmax, who reported a double-digit first-quarter sales drop on Friday, is fighting to include used vehicles in that legislation that will also benefit rival AutoNation. They also happen to be the latest in our America's Greatest Business Rival series, and Chris Cotter shows us where the battle first got started.
Buying your dream car, the key to keeping you in the fast lane. Two companies, AutoNation and Carmax, are helping you cruise along through the road of life. AutoNation, the largest automotive retailer, was founded in 1996. The Jacksonville, Florida-based company is revved up by both new and used vehicle sales. It makes it possible for you to gun the engine, maintain a well-oiled machine, and cart your precious cargo. Over the years, it's grown through a series of dealership acquisitions, including those for Mercedes-Benz and Land Rover. Carmax buys, reconditions, and sells used vehicles. Whether you're looking for a rugged four-wheel drive vehicle or a luxurious six-figure sports car, you can probably find it at a Carmax. The Richmond, Virginia-based company makes it possible for you to avoid picking out a lemon by providing appraisal services. It also helps you manage your debt load through its financing area and service plans. Carmax now operates about 100 used car superstores across the country. If you owned 1,000 shares of AutoNation stock on June 18, 2005, they were worth $20,190. Those same 1,000 shares would be worth $16,760 now. If you owned 1,000 shares of Carmax stock 5 years ago, they were worth $12,420. Now, they would give you $13,090. Would you invest today?
All right, well, with more, I'm joined by Mary Beth Kellenberger. She's a senior consulting analyst for the business research and consulting firm Frost & Sullivan. And Wes Raynal is the executive editor of Auto Week. Good morning, guys. Thanks for being here. Mary Beth, let me start with you. What makes this such a good rivalry?
Well, I think both companies are actually competing for today's consumer dollars, and we are seeing more consumers making decisions between new and used cars than they have before.
Wes, would you agree?
Yes, definitely. The used car business has always been more stable and less volatile than the new car retail business.
I'm looking here at, Mary Beth, at AutoNation's stock price. It has quadrupled since the October lows. What specifically is happening at AutoNation, given the fact that vehicle sales have been declining? We're now at a 9.5 million run rate here in the United States. What's working for them?
I think it has a lot to do with how the company has been managing its diversification, that it has spread itself across a variety of brands of vehicles that has certainly moved itself, its relationship, I should say, to GM, Ford, and Chrysler. So it's shifting its brands and keeping pace with consumer demand.
And Wes, at the same time, you had Carmax come out and report on Friday that it earned $28 million, about 13 cents a share in the 3 months ended May 31st, I should tell people. That was down just slightly from $29 million a year ago, still at the 13-cent share run rate.
Right.
How's Carmax doing?
They're doing fine, and I think there's a couple of reasons for it. People in sort of this downturn economy, used cars are easier to get. I think people like Carmax's no haggle policy, and you know, there's stores all over. It's sort of like Walmart almost, this sort of big box phenomena.
So, Mary Beth, what specifically is different about AutoNation from Carmax?
Well, certainly it offers both used and new vehicles throughout its mix, but it's also dealing with many more of those premier lines. It has diversification and it tends to be more focused on that new lineup versus that used. The company has been managing itself extremely well. I think that's something that's very common between both companies, is that they're very concerned about that bottom line. It's not necessarily a difference between them. It's that they're approaching the market through a different way, used and new versus used, but it's how they are paying attention to the bottom line that is really making them successful.
Interesting, Wes, I saw that AutoNation right now, I think on their lots, has about 30% domestic vehicles, but about 70% of those vehicles are from auto manufacturers overseas, many of which are starting to dominate the spotlight. When you look at the current platform, where we are in terms of the dealership closings at the GMs and the Chryslers, Is this an opportunity for Carmax and AutoNation to take advantage of some weaker foes, particularly in certain areas across the country?
Right. You know, you could zero in on a place, if you were Carmax or AutoNation, you could zero in on a place that just lost its Chrysler, Plymouth, or GM store, sort of a medium to small to medium-sized town, and say, listen, we have cars, come see us. We have a no-haggle pricing policy. We can get you financed. You can do it all under one roof. That's going to appeal to people who just lost a dealership in their neighborhood. I think one of the keys with AutoNation, though, is the diversification. They didn't, when GM closed 6 of AutoNation's dealerships, that doesn't even blink there. They don't even blink.
What about, guys, that we mentioned at the very top, the Cash for Clunkers bill? It does not include purchase of used vehicles. In fact, you can get from anywhere from $3,500 to $4,500, depending on how much more mileage per gallon you get if you purchase one of those vehicles. To both of you guys, what does that do to Carmax and AutoNation? Let's start with Mary Beth.
Well, I think it certainly is an advantage at this point because it is oriented towards new vehicles. There is an opportunity, and it would really depend on used vehicles as to what percentage of the population of vehicles that Carmax has would actually qualify under those rules. So it is certainly an advantage for AutoNation at this point. The challenge moving it down the road is what does it do to the vehicle population in general and the repair industry down the road if we take out a segment of the vehicle population by scrapping those vehicles.
Yeah, interesting point, the repair business as well. Wes, what do you think about the Cash for Clunkers?
I'm not sure what to make of it yet. I'm still trying to wade through it. It seems like there's a lot of loopholes. It's going to be very complicated. It will probably get more complicated as it goes. But I don't really have a problem with it including used cars, I guess. If the goal is to use less oil, if you trade in your 18-mile-per-gallon SUV on a used Corolla that gets 35 miles to the gallon, why isn't that okay?
Interesting. All right. Great points. Mary Beth and Wes, thank you guys so much. Good having you both on.
Thank you.